What's up everybody? Welcome to the Stocks channel. My name is Corey and today we'll look at weekly charts of all of the indices, the VIX and Bitcoin. First up, let's take a look at a weekly chart of the SPX S&P 500 index. So let's crack open this chart and see what's going on in the stock market today. Alright. Also happy 4th of July. So first up, we'll look at a weekly chart of the SPX. So remember, every candlestick is one entire week's worth of price action, and you could see last week we did see a pullback yet again. So the week before last, we did get that oversold bounce, and I did remind you this is still a bear market, so we will get those oversold bounces and we can get bear market relief rallies, but you can clearly see that we are in a downtrend with lower highs and lower lows. So get used to seeing lower highs and lower lows as long as we're in a bear market. So in order to break out of this downtrend, we will need the bulls to hold above 3,800, because if we break below 3,800, you're looking for a retest of the previous low right around 3,675. And if we break that, you're looking for the next price target down here at 3,500, which is achievable by the middle of July. So we could continue to trend lower. Now, if we can hold 3,800, that will be signs of relative strength. And then there will be the possibility we try to come back up here and break above the previous high at 3,900. And if we break out above 3,900, you're looking for lots of resistance above right around 4,100 to 4,200, with that previous high being right around 4,158. So 4,158 is the high that the bulls need to break above to start breaking this downtrend, because we will need to get some type of higher high to eventually scare away the bears. Now, this is a bear market, so the bears have full control, and while they have advantage of a strong downtrend, they will continue to show up at very strong resistance levels. So you will have a very tough time going against the trend as a trader. So just be very aware of that if you are making long trades, the trend is still very strongly in the downward direction. So you are going against a very strong downtrend every time you take a long trade. So the path of least resistance is still lower until we see some type of higher highs and higher lows on this chart, which will take many weeks to develop because we are looking at a weekly chart. We need to see this higher low, and then we need to break all the way back above 4,158. And then we can say the bear market is likely over and we're going back into a bull trend, which we don't know exactly how long a sustainable bull rally will last. But the price action that we're looking for is exactly what I have just drawn on this chart. Otherwise, you are going to continue to expect this leg lower to continue to hit our downside price targets. As long as we're in a downtrend, you should get used to this look unless we see the bulls proving it in the price action. These lower highs and lower lows are exactly what you're going to see in bear markets. So just get used to seeing that and make sure you're planning around that, and you should be getting risk off at resistance or even shorting this market until the bulls break the downtrend. So those critical support levels will be 3,800, 3,675, and then if we break that previous low, you're looking for that next price target down here at 3,500. It's really as simple as that. So make a trade plan that revolves around those three critical support zones. And if we continue higher, you're looking for that critical resistance right around 3,900, 4,100, and 4,158. On the bear bull survey, we are seeing a little bit of reduction in bearish sentiment, but we're still overall very bearish, with over 46% of the people that are bearish and only about 22.8% of the people that are bullish. More often than not, the majority are going to get this market wrong, so in the short term, we could get a little bit of a bounce because nothing changes sentiment faster than price. Keep in mind, as long as it's a bear market though, every bounce is likely a lower high, so don't be getting overly bullish just because we're seeing continuation of the upside, because more than likely that will form a lower high before the next leg lower. So we were getting a little too overly bearish, so I wouldn't be surprised to get a little bit of a bear market relief rally, but we are in a strong downtrend, so if we lose that support level at 3,800, throw all sentiment out the window because you need to be following price action, and a breakdown of 3,800 is very bearish. On the fear and greed index, we are still extremely fearful with a reading of 24, which is again a contrarian indication that we could be due for a bounce in the short term. So as long as we have bearish sentiment and extreme fear and SPX is trading above 3,800, I do think you can stay bullish in the short term, but as soon as you lose that support level, you need to look for that next leg lower. On the NDX weekly chart, you can see again we're continuing the downside with the bounce 2 weeks ago and continuing to the downside last week, and we did break below that support level right around 11,768. So we're more than likely coming down to retest the previous low, which was a closing price of 11,266. On a break below 11,266, the next price target is down there at 10,589, and that is going to be the next leg lower if we take out this previous low. The high to break above is all the way up here right around 12,700 and 13,000. So we'll need to see bulls getting above that critical resistance before we assume this downtrend is over. You could very clearly see on this weekly chart is a very strong downtrend in the NDX because the tech sector did lead the way lower and hit the bear market first. Because the tech sector was in the bear market and led the way lower, we should see the tech sector bottoming first. So any signs of relative strength in the NDX could tell us that we have a bottom in for the market. But right now, we just don't see anything that tells us this bottom is in. We need to start seeing a higher low and then break some of this upside resistance. So on the breakdown below 11,200, look for that next leg lower at 10,589. And that should be a support level that we will see buyers stepping in at. But you will always want to wait for price action confirmation. On the Dow Jones weekly chart, you can see we were also red on the week, and we did bounce off of that support intra-week at the lower support channel trend line, and we're very likely going to fill this gap at some point down here right around 28,500. We just don't know exactly when that gap is going to get filled. Without a doubt, I would say that this bear market is not over until that gap fills, and we could go even lower down to the next target at 27,583. So while we may get a bear market relief rally in the short term to come back up to some of this resistance right around 32,000, do not get overly bullish just because we are seeing green days. We need to see that bullish price action of higher highs and higher lows. And right now we're just getting these dead cat bounces from oversold conditions and continuing the downtrend. So I do believe we will see that gap filled before this bear market is over. The strong support on the way lower to fill that gap is going to be right around 29,800. So if we lose that support, look for the gap fill below. And just because we fill the gap doesn't mean we can't go to the next target lower. So also watch that target down there at 27,583. On the Russell 2000 weekly chart intra-week, we did close that weekly gap to the upside, so we no longer have the upside gap, and then we did close the week in the red, but we are still above this support right around 1700. If we lose support at 1700 or down here right around 1663, the next leg lower will likely be 1578 and then 1536. And you can clearly see that the Russell 2000 is in a very strong downtrend. Like I continue to tell you, we could see some more upside, test some of this upside resistance before we get that next leg lower. So the critical upside resistance will be right around 1766 and then 1888. So if we do start breaking any of that critical resistance, that will be the bullish breakout. But don't assume we get the bullish breakout. Let the price action prove it, because we are still in a strong downtrend. All of the bears will show up at resistance, so we will likely have a very difficult time breaking the downtrend until the bulls can scare away the bears. On the VIX weekly chart, we see the VIX did close below the 20 simple moving average on the weekly chart, but we are still forming higher lows and lower highs, so the VIX is in some type of wedge, and we're about to see a very major breakout. If at any point the VIX breaks above 30, that will be the bearish breakout where we're likely going to get the next leg lower in the bear market. But if at any point the VIX starts breaking down below 24 and losing this support trend line right around 21 to 22, that will be the bullish breakout, which could lead to a sustainable bull rally. So the VIX is still at the elevated volatility zone, which does tell us volatility is still in this market, but keep in mind volatility does work in both directions. So use the breakout above 30 as the bearish leg lower, or the breakdown below 24 to give more favor to the bullish scenario. On Bitcoin's weekly chart, we're trading right down here around this critical support at 19,000, and if we lose that support zone, we'll likely go to the next price target lower at 12,000. The critical resistance to break out above is all the way up here above 32,000, and we'll need to see price action above 32,000 before we lose the downtrend. So as long as we have the downtrend, it does look like Bitcoin is trying to get to $12,000, but we need to respect the fact that there's strong support right around 19,000, which could lead to a bounce all the way back up to resistance at $28,000. So you can get a lot more bullish if we get the bullish breakout above 22,000 for a retest of 28,000. But if we do lose this support zone, look for the next leg lower at 12,000. On ARKK's weekly chart, you can see we're still well below the support trend line and that critical resistance at $48. So we're still staying bearish until ARKK can start getting consecutive closes back over 48 or back over 50. There's no reason to be bullish on this ETF while it's in such a strong downtrend. So wait for a confirmation of a bull breakout. So jumping back over to the S&P 500, this is clearly a very strong downtrend that just gets dead cat bounces and bear market relief rallies before the next leg lower. So get comfortable seeing more lower prices during this year until we see a bullish reversal, which we need evidence in the price action. And we're not going to assume a bottom is in until we see that bullish trend. So look for that next leg lower at 3,500 if we start breaking down below 3,800 and then 3,675, and do not expect more upside. Let price action prove it, and you'll always have time to act accordingly. You're going to have a very difficult time in this market if you continue to expect a bottom or a bull market during such a strong downtrend. So just reprogram your brain to get comfortable seeing the trend going lower during this year until we see a reversal. Nobody knows how long this bear market's going to last, and nobody knows where the bottom is actually going to be. And we have price targets that could take us all the way down to 3,200 and possibly even lower. So don't bother trying to guess where the bottom is. The price action is clearly telling us that we're trending lower until we see some type of reversal. Use great risk management in this market, and as an investor, only accumulate at very critical levels. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I'm doing intraday updates and analysis and bringing new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.